Welcome back to Investing with Confidence. I am your host, Joshua David, having a good time in the studio with my good friend, my great pal, Mr. Al Connickson. Also, don't forget to subscribe to the Investing with Confidence podcast, wherever you listen to podcasts, and check it out on YouTube. Al, as we get into this final segment, we've talked a lot about the other markets, like the futures, forex, and options market, how phenomenal they can go hand in hand with the stock market, whether people are in their income accounts or retirement accounts. Now, we talk a lot about why that is.
Mm-hmm.
The leverage really helps a lot of people participate, right? Because it allows people to maximize their capital. So let's dissect that a little bit more on how that really works, because it's kind of like a down payment. And to give some more color on that, it doesn't mean they're going to take your money out of your account.
No.
They just require a certain amount in your account to buy a certain amount of contracts, we'll say. So
Correct.
Explain that a little bit.
Yeah, this is called margin, and it's an amount. It's kind of just a safety net for the broker, but they are willing to do that. They're willing to give you that margin, basically, which becomes a down payment on the full value of a futures or forex or options contract. That leverage is the backbone of the futures and the forex market. And what people are doing there is they're looking at borrowed capital, that margin, potentially to increase returns while minimizing or risking the minimum amount of money. It's like getting the maximum productivity out of every investment dollar you have, much like you would out of an employee if you had a business. I mean, if you had somebody who came in every day and went in a corner and slept all day long, you probably would fire that person. Well, the same thing with your money. Why let that sit around and collect dust? Maximize the value of it. And I think one of the strongest things I can say about these leveraged assets is that I would say 90, maybe even close to 99% of the students that come through our classes, they only come in knowing about stock and mutual funds, but want to trade one of those leveraged assets. They realize the value of them. And the reason that the institutions and the pros use them is because they also realize the benefits there. The least beneficial actually is the stock market. And that's really the mutual fund market, same thing. Mutual funds are just, a combination of stocks. Well, you're paying fees for mutual funds that can take a significant amount away from your returns. For stocks, a lot of the companies out there that people would like to own now are very highly priced.
They're expensive.
Amazon's over $3,000 a share.
That's why options are so great for people that want to purchase those stocks.
Exactly. Well, even look at Apple, maybe around $130 a share. Well, a lot of people can't put together, say, a full position, 100-share position for $13,000. So how do you participate in the movement of Apple stock? You can do it with an option. And, depending on, there's different types of options, different parts or different components that we can't get into right now. We'll talk about more of those in the class. But maybe you could control 100 shares of Apple stock, the movement of it for, several $100s or significantly less than that full position.
Basically,
so it does
buying a contract, essentially.
Yeah, it allows people that don't have a lot of money to participate. And it also allows people with large amounts of money that don't want to take big pieces of it to still participate with a small amount with the potential for a greater return.
That's a very interesting concept there, because most people think you have to invest everything that you have. And that's how brokers and advisors are doing it. They're putting all of your money, all of your capital at risk.
Sure.
Now that is a risky strategy.
Yeah.
So why would you want to use all that capital when you have the opportunity to utilize portions of it using the proper option strategies to do that?
Sure. And it also gives you the opportunity to have different positions, more positions, and be better diversified.
Mm-hmm.
You mentioned with futures, the diversification there. That, I think, is one of the problems that people make in their retirement accounts. They think they are protected with diversification. And diversification within the stock market really isn't going to help you. It's going to mitigate the losses maybe, but if you look back at the major market drawdowns or corrections, pretty much every sector of the market considering stocks goes down because the correlation becomes very high. With futures, you have great diversification because the commodities typically don't have anything to do with the S&P 500 or the NASDAQ or the Dow.
Yep, that's how you can really diversify yourself, so you don't have to worry about drawdowns by hedging. There's different techniques and strategies that investors can utilize there, but the key is to lower fees and use your capital efficiently. And so, Al, with these investing classes that you were actually just talking about, you get into more detail about this leverage, how it really works, different concepts that the average investors can use. That really the smart money, they're actually doing it every single day.
Sure.
Telling the public to just buy and hold. A lot of that, especially for options, just creates volatility. They just need movement in those options.
Correct.
And that's why they're doing that. So think about this. It's kind of conditioning the public to do what they want to do. Al, you kind of kicked the show off here today with, there's really, investors are entering in these markets right now at a huge pace. They're just flocking into the markets. It's almost like the institutions are fishing. They're throwing out some bait, potentially propping these markets up. I mean, there's a few different reasons why that's happening. But I think a lot of people, and you said it right away, they're going in without the education. They're going into the markets without learning. Why would people put their hard-earned money on the line and not knowing what to do?
Sure.
So what are some of the ways that you're helping people get out of that condition, that novice mindset, and really treat things like the institutions do?
Well, it again, like anything else you do, you want to know how it functions, and you want to know how to best approach whatever that is to get the maximum benefit out of it. And that comes with education. And unfortunately, the schools aren't doing it. The high schools aren't doing it. The colleges aren't doing it. But just to tell you how significant this is, because you mentioned, I think you kind of alluded to the fact that maybe there's some manipulation going on in the market.
Potentially.
Yeah, but you know what? Back in 2008, when we went through the real estate debacle, that bubble popped and the S&P was down 57%, the majority of people in this country lost probably between 30 to 60% of the assets in their 401ks. And this is the sad thing, that the guy that was head of the 401k lobby at that time, he said that the people that lost money have no one to blame but themselves. People chose to take on equity risk. Well, it's because they didn't know any better. But by being in a 401k, they accept the responsibility for what happens. Well, how do you get around that kind of, I mean, that's putting the blame on you. And that was not fair, because these people were not providing the education. They weren't providing the guidance. That's what we're doing for you. We're giving you the opportunity to have the knowledge, so something like that doesn't happen to you. There are opportunities out there every day to take advantage of. We don't want you to be taken advantage of. You should be on the other side of that and take advantage of the opportunities by being prepared.
Yeah, one of the things that I like to try to help people do is change their mindset, right? Because think about this. How many people have you talked to, probably a lot of your friends, Al, where they said, well, I lost 60%, but everybody lost 60%. Does that make it okay? Of course it doesn't make it okay.
Misery loves company. No, but you're exactly right. That's a good point.
They condition themselves. Yep. And it makes people feel better because they're in a boat of everybody else. They're in a boat of everybody else that have challenges retiring.
Exactly.
And that's the problem with this society, is people have been conditioned to try to keep up with the Joneses, sometimes in the wrong way. They want to be part of somebody else, and whether it's good or it's bad, right? So if people are losing a bunch of money because of a down market, don't be the one that's saying, well, I am too, but that's okay because they are as well. Learn the techniques, learn the strategies, and take control of that pathway. Make sure there's not a log in front of that pathway to get to your destination, whatever that may be. So, Al, it's getting close to the end of the show, and we've talked a lot about these different leveraged assets. We got into leverage with futures, forex, and options. Different ways people can potentially lower fees using different types of investments, like an alternative to mutual funds. But I think a lot of the show today was helping people understand that we're being conditioned by the smart money, and we're being conditioned to do typically and potentially what they want and need.
Sure.
Because we know we have a retirement crisis. If you feel like you're in that boat, take some action and learn the techniques and skills to not be there. Al, you inspire a lot of people to get started in the financial markets, and a lot of that you've helped a lot of people get going, building that confidence and building that consistency in their investment decisions. It starts with some words of wisdom. Let's hear them.
Well, yeah, I think a lot of it gets down to choices, Josh. And in life we have choices. One choice that too many people make is just trying to get through or just trying to get by, and accepting that where they are is where they're meant to be. But there are other people that choose to make choices to help realize their potential. And you're in charge of which direction you follow, but it starts with taking the first step. So how about this? How about instead of just being afraid what could go wrong, how about start by being excited about what could go right?
And that really comes down to those 3 C's. Having the confidence to start, right? Building consistency to make better choices. Same time, same place next week. Until then, retire young, my friends.